So the unemployment numbers are out and they are shockingly bad, and it feels a lot like 2008 in Canada today. So let's get right into it and see what is going on. So let's start off with the unemployment rate. So the unemployment rate has gone up to 6.1% as of the recent unemployment report that was just released. We're going to go into the mainstream media, the breakdown by province, how much of that is public sector, Bank of Canada, all that stuff. So stay tuned. So Canada's unemployment rate jumps to 6.1% as jobs unexpectedly fell in March. And we have to bear in mind, these numbers are pretty manipulated. So let me read this off so you just get the gist of what's going on here. So economists polled by Reuters had expected a net gain of 25,000 jobs in March and the unemployment rate to edge up from 5.8% to 5.9%. It went up to 6.1%, as I said here. The increase in unemployment, up 0.3 percentage point from the previous month, was driven by an increase of 60,000 people searching for work or on temporary layoffs, Statistics Canada said on Friday. So a lot of that could be labor participation rate increasing, more people coming back into the workforce that maybe had retired before. You've also got layoffs, and you've also got the population contributing to this as well. So it's the biggest jump since August 2022. Cast your mind back to August 2022. What was the economy like then? What was the economy propped up by then? Government stimulus, government payments, loan deferrals, all that sort of stuff. And the highest rate since January 2022, when unemployment reached 6.5%. Outside the pandemic, the last time Canada's unemployment rate hit 6.1% was November 2017, which wasn't good times for Canada either. So obviously, it's clear that the economy is being impacted by the reduced spending. And anyway, we'll get into the Bank of Canada, all that stuff in a minute. Just let me continue reading this. So the cracks that had been emerging within the Canadian labour market suddenly got a lot wider. CIBC economist Andrew Grantham wrote in a research note on Friday, noting while the loss of 2,200 net jobs isn't a large decline given the volatility of monthly labour market data, it came in contrast to Canada's surging population, which is totally true. So the amount of people coming into the country, and you look at what's going on with unemployment, it doesn't look very good at all, does it, guys? And then they basically, in this article, start talking about the Bank of Canada, what's going to happen there. And, you know, really, when it comes to the Bank of Canada, you've got to think about productivity and other factors, not just what is going on with unemployment. I mean, that's not even what their objective is. They're not the Federal Reserve. Their primary objective is price stability, not unemployment. So it's kind of crazy how they think that. They actually want unemployment to rise. So anyway, this is from Statistics Canada. So employment was little changed in March. You lost 2,200 jobs and the unemployment rate fell 0.1 percentage points to 61.4%. There were fewer people employed in accommodation and food services, minus 2.4%, wholesale and retail trade, minus 0.8%, and professional and scientific and technical services, minus 1% in March. Unemployment increased in 4 industries led by healthcare and social assistance, predominantly public sector growth when you really think about that. Unemployment decreased in Quebec, minus 0.4%. Saskatchewan lost 1%. Manitoba lost 0.6% in March, while it increased in Ontario, plus 0.3%. So let's take a look at what happened with the public sector, private sector, self-employed. This is always the most interesting part. And interestingly enough, when you actually look at the data, we actually had some private sector employee growth this month, which contrasts to most other months where it's been declining. Public sector jobs have been surging. So we actually saw, okay, this number is increasing, which is a little bit nice. Shame it's so low. But again, you know, it's just crazy when you think about the surging population and everything that is going on. You talk about all these jobs that have been created over the past 12 months, and then you look at private sector employee growth, and it is pretty abysmal. And then you also saw self-employed, that dropped by 29,000. Yeah, so you had a 29,000 drop in self-employed people. So again, that's kind of what's going on there. So you can see basically you saw agriculture, which lost 2,500 jobs. Natural resources for once gained 3,500 jobs. Utilities up, construction, manufacturing up slightly. But the services producing sector pretty weak. And we talked about this before because this is most likely to be affected by the bullwhip effect. As we talked about during the pandemic, you saw a lot of people going into goods producing sector products. They were ordering stuff on Amazon. Then you had the reopening, the release of all these government restrictions, all these draconian restrictions that we had, and people started gravitating more towards services and experience type purchases. And obviously what that leads to is a bullwhip in that area, which then sends prices surging of services. So you had prices of goods surging, you saw what happened with the ports and everything like that, then you had prices of services surging. So you would expect that that would be coming back right now, considering the reduced amount of spending that we have. And then they put this interesting infographic up, which basically shows some of the largest metropolitan areas in Canada and how much unemployment has increased since 2023. You can see St. Catharines, Niagara, where my good friend John Flynn is, has absolutely skyrocketed. I mean, that has nearly doubled. It's up nearly 100% in 1 year, unemployment. Oh, God, you just can't make this shit. I'm telling you. So Windsor, you can see that that is up massively. Toronto also up massively. Kitchener, Cambridge, Waterloo, that is up ever so slightly. Calgary pretty much unchanged, but still one of the highest. We're going down in descending order here. So the top ones have the most unemployment. And then you've got London, 6.4%. That's increased a little bit. Hamilton, pretty flat. Edmonton, pretty flat, little increase. Montreal, little increase. Sherbrooke, Quebec. Vancouver, barely increased. Regina barely increased. Kelowna is up substantially. I mean, that is coming from around 2.5%, 3% by the look of it to 5.4%. So it's up like 60%. You've got Saskatoon that is up ever so slightly, 5.2%. Oshawa, Halifax. Victoria's up quite a lot. You've got Quebec in general, which is really low down here. Winnipeg, pretty flat, and Ottawa, pretty flat as well near the bottom. So it's very interesting that you've got that, you know, some of those hot markets, especially like Calgary, for instance, one of the highest unemployments in Canada. So not obviously a great thing, but anyway, a place of speculation right now. So let's take a look at this. So unemployment rate by province and territory, March 2024. So you had the unemployment rate go up in Alberta, 6.3%. Now it's up 0.3% in BC, 5.4%. It's up 0.4% in Saskatchewan, 5.4%. Manitoba, it's up 0.5% to 5%. You've got Ontario that's at 6.7%, up 0.2%. You've got Quebec at 5%, up 0.3%. You've got New Brunswick, which is up nearly 1% to 7.8%. You've got Nova Scotia, which is also up to 6.2%, up 0.2%. You've got PEI up 0.4% to 7.4%. And you've got the new fees that are at 10.1%, double digits, and it's gone down 0.1% there. And then obviously you've got the territories, but the populations are so low there. Pretty hard to measure. Some of these provinces as well on the East Coast, same thing. Anyway, you can see Canada as a whole, 6.1%, up 0.3%. So anyway, they're talking about all this speculation about the Bank of Canada and, oh, they're going to be cutting rates real soon now. And that very much might be the case. I mean, it feels a lot like 2008 right now in the sense that a lot of things seem to be going wrong. You know, you've got gold surging, and when you look historically, when gold surges, that is almost never a good sign. And you've got all these different things that are happening within the economy. Most of the growth is coming from the public sector. You don't have to be a rocket scientist to work out what's going to happen if they start cutting rates. You know, if they've had to take rates to 5% to get inflation down to 2%, are they immediately going to start cutting rates? Because by their measures, that would mean inflation is going to go up. And, you know, you would kind of follow that mentality if you think about it, because with what's happened with the Bank of Canada, what's happened with all this public sector growth, you would think that, hold on a second, inflation could go up a lot because a lot of the growth in the economy, a lot of the spending is coming from a sector of the economy, the government, which doesn't produce anything. So by default, it's like new money coming into the system when it's deficit spent by the government, and that money is chasing goods and services, but they aren't putting out any goods and services. In fact, they're just increasing red tape and regulation all the time, which also adds to the pressure of inflation and everything like that. And also you've got productivity that is going down. And we've had the Bank of Canada, Caroline Rogers, who's come out and said, we've got a productivity emergency in Canada. And we've been talking about this for a long time on the channel. You know, when you've got an increase in population like we've got, and you've got productivity declining like this, again, that adds inflationary pressure. It adds gasoline to the fire. And yes, inflation is coming down right now, but if you were to just put interest rates down to 1% by the Bank of Canada's measures, inflation would shoot up. So why on earth would they start reducing rates at this point? Kind of doesn't make sense. And it also doesn't go with what they've been saying as well. So there's a lot of speculation around this, and it may happen. Like, I can't predict the future, full disclaimer. I just want to throw that out there. Nobody can. When you look at what they're actually saying, doesn't really look hopeful. I think obviously if there is an apex event of this crisis, then yeah, you could see them cutting rates, and they could cut rates very, very quickly. And that could happen. The risk of that is increasing. We've got a yield curve that's inverted. We've got gold that is surging as well now. And those things are never a good sign. So another thing that I want to quickly go over, also we had the Canada Ivy Purchasing Managers Index that came out literally an hour after they came out with the unemployment report. The Canadian dollar kind of did not know what to do, because it's like, what the hell? Now we've got the Ivy Purchasing Managers Index saying the complete opposite of what the unemployment report said. The Ivy Purchasing Managers Index was actually pretty positive. So it's kind of really weird what is happening right now in the markets, and the markets aren't really knowing how to digest all this stuff, which is very interesting. But yeah, the Ivy PMI came out, and even the unemployment portion of the Ivy PMI, you know, that ticked up quite substantially there as well. And when you look at the Ivy PMI, okay, yeah, it's still pretty low compared to where it's been in the past. You know, it's by no means a booming economy, but it is actually as high as April 2023. Again, we got a lot of contradictory information that's coming out here and there. And then basically another thing that I want to quickly go over, you know, we covered this a couple of weeks ago, but basically you've got GDP per capita in Canada that has pretty much done nothing since 2013. And you've got the US that has took off. And basically this kind of makes a lot of sense, because this is why our economy is so weak. And what a lot of people don't understand, this doesn't paint the best picture, because when you actually look at the top 10%, for example, their GDP per capita is rising at the expense of those people at the lower percentiles where their GDP per capita is absolutely falling through the floor. And that's why living standards are collapsing in Canada, and they're completely going down. And when you contrast it to what's going on in the United States, it seems like a totally different economy right now, like not the same at all. And we've also got the ramifications of a debt bubble that is going on in Canada, you know, this large credit bubble that can no longer sustain itself, and that is bursting, and all the ramifications that that has. People are racking up debt to pay down debts. Like, it's essentially a pyramid scheme, and it's all gonna come to an apex event at some point. And it looks a lot like it will be commercial real estate and these CLOs, which we'll be going into in upcoming videos. So anyway, guys, if you've enjoyed this video, I would highly recommend that you check out this video here. If you're looking for a VPN, go to expressvpn.com/marketmania. I will see you in the next one. Take care.